Hey everyone, Couch Investor back to another video for today. So in today's video, we're not going to talk about a specific company. We have all the rest of the week and weeks to come to talk about earnings. So we're going to do that in other videos. But in this video, we're going to talk about the most overused term in the last couple of weeks, if not months, and that's recession. Now, obviously, granted with high inflation, those two terms are extremely popular today, and maybe rightfully so. But history tells us that during a recession, during a market downturn, usually that's the best time to start picking great companies for the long term. Now, I'm not here to tell you which company you should buy specifically during a recession. That's everybody's choice. But I will show you some interesting graphs because the only thing that's missing right now is the headline saying confirmed recession is here. Because right now we're only talking about speculations. We're going into a recession, it's going to be a mild recession or a hard recession or whatever other term they want to use, because right now GDP growth is not yet confirmed to be negative. But we all know the truth about that. We all know what phase we're in today. High inflation, lots of people are getting laid off, even though the unemployment rate is still very, very low. But that's something I'm going to show you in a bit. That's very, very interesting at the start of a recession and at the end of the recession. Now, I do want to add a couple of things before I show you some graphs. It's that while history might not repeat itself, but it might rhyme, today's world, today's economic environment is very, very different to the ones in the past. Today, we have lots and lots of things that can be done by computers, AI, machine learning, by basically technology, things that could not have been done before. So today the economic output can be generated through, well, not humans. So that's already one important factor to put into this scenario that you couldn't really put 10, 15, 20, 30 years ago. Now, yes, with that said, people still need to earn a living, because if they do not, they cannot buy food, they cannot pay for rent, they cannot pay for energy, and well, all of that stimulates the economy, and we cannot continue to print out money like we've done during the pandemic. So universal basic income, we already tested it out in the last 2 years, and well, to be honest, didn't work. So graph number one is history of payrolls heading into recession. So as you can see, non-farm payrolls have been rising. Now on the bottom left, you can see the gray area is the recession, the very, very small recession we had at the start of the pandemic. You can clearly see that at the start of it, the non-farm payrolls were still a bit stable, and only after a really big shock did it crash. Now, moving to the right, the 08, 09, you can see again, the gray area at the start of the recession, non-farm payrolls were still on the rise. Only after a month or so did it come down, and then 3 months later did it come crashing down. Now I can go even further in the past, so we can see top left, 73, 74. Non-farm payrolls during a recession actually has gone up. On the right, 69, 70 non-farm payrolls, yes, dropped down first month, but then went up for the next couple of months, only to come down a little bit later. Then at the bottom, the 60s, you can see recession starts, and there it drops directly. And this is basically where I'm going with all these points. So unemployment rate always near lows at start of a recession. As we've seen today, we're at 3.6% or so, still extremely low. So the gray areas are obviously recessions. Now, yes, the one we had in 2020 is an extremely rare case scenario. But as you can see, unemployment rate in 08, 2001, then in the 90s, late 80s, you can see that it starts going up when a recession already started, as we've seen in the last couple of graphs, and it almost always peaks at the end of a recession. Now, unemployment claims are up 36% from true. So you can see here on the right, you can see it already spiking up. Now, maybe in the next graph I'll show you in the next couple of months or so, when that will come out, you will see suddenly that gray area popping up right there when the spike already happens. And as you can see, we're well above that average percentage increase in initial jobless claims. Historically wise was 20.4%. Right now, we're at 36.4%. And here's the last graph, job cut announcements over 60% over the past year. So on the left, the Challenger job cut announcement, the year over year change. You can see that obviously in the last 2 years that was negative. Then on the right, you can see the announcements more clearly. So from May to June, you can see there a huge jump. And yes, maybe that's where you will see the gray area start when the next couple of graphs will come in the next couple of months. So now that you've seen all of these graphs, now that you've seen and heard all of the big tech companies laying off employees, hiring freeze, etc., what are your thoughts going into this recessionary environment? Leave them down in the comments below, because I do think that from an economic standpoint, yes, maybe it's slowing down right now, but we're still in a better spot than before. We will see earnings compression for a lot of companies, but last week, bank earnings were pretty good, I think so. The only bad thing was Snapchat there. This week is going to be an important one because, well, super big companies are reporting earnings. But overall, I don't think the recession, the mild recession or the hard recession, depends on how you want to look at it, can be compared to the ones we had in the past. Because right now it is mainly because of, well, coming out of the pandemic, super high inflation because we kept printing money like there's no tomorrow, war between Russia and Ukraine, China doing whatever it wants. So mix all of that plus a US government that has no clue what the heck is going on, you get the current situation. But does that mean that the big companies, the important companies, aren't doing well? To me, I don't think so. And I do want to add one more thing, and that's the fact that inflation might have peaked already. We'll only find out in a month from now in the next CPI report. Now, why am I saying this? Well, I'm saying this because the last one we got did not calculate the drop in gas prices. And gas prices have dropped since then significantly. And we all know that energy is a big part of that report. Now, all the rest of the items there have already been dropping in the last couple of weeks, if not months. So the next CPI report might be much better than what most have feared, and that might suddenly change everybody's opinion on the environment. Remember, opinions change daily because of headlines that everybody reads. But at the end of the day, what you need to do is build your portfolio for the long term. Doesn't matter if we're entering a recession right now, if you're picking great companies, obviously you need to pick great companies regardless of what time we're in. But right now you will see a lot of consolidation in the market. I've talked about that in many videos, as we've seen in the last couple of weeks. A lot of companies are starting to do M&As, lots of companies are merging together to survive and to maybe have a better chance in competing in a more difficult environment. So again, do share your thoughts down in the comments below. How are you going to manage your portfolio during this type of environment? The only thing I can say here is selling right now, to me, doesn't make any sense, but that's just my opinion. Obviously, if you enjoyed this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.